Welcome back to Crypto Mates AI. Jerry here's an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now, let's assume these numbers aren't current, most likely, and that there are 5 billion XRP available on exchanges. The 79 million XRP absorbed by Franklin Templeton's XRP ETF represents 1.6% of the total available supply. Are you paying attention? It doesn't matter how late it is. What matters is that the supply shock is inevitable. The yen carries singularity. Japan's 40-year bond just hit 3.69%, the highest since 2007. This is not a number, this is a detonator. Behind that yield sits 20 trillion in carry trade exposure, borrowed yen funding everything from treasuries to tech, stocks to Bitcoin. For decades, this trade printed money. Now Japan's bond market is calling in the loan. But here's what nobody is telling you. The yen carry unwind connects to 9 other leverage pools. Together, they exceed 50 trillion. The Treasury basis trade 1 to 2 trillion at 100 to 1 leverage. Hedge funds arbitraging cash bonds against futures. One volatility spike triggers margin calls that force Treasury selling. Commercial real estate, 957 billion in loans maturing this year, 3 times the historical average. Regional banks hold 28% of assets in CRE. 59 banks exceed 300% of equity exposure. Private credit, 3 trillion. Interest coverage ratios have collapsed to 1 times. Borrowers are covering interest payments with operating income, no margin for error. Corporate bankruptcies, 694 last year, highest since 2010. This year is running 12% above pandemic levels. Zero-day options, 51% of S&P 500 volume, $1 trillion in daily notional. Dealers flip from stabilizers to accelerants when volatility spikes. Japan pensions, 4.4 trillion invested abroad. They brought 28 trillion in domestic bonds in 8 months. The largest repatriation in 14 years. They are coming home. China, Treasury holdings down 18% from peak. Gold reserves up 11 consecutive months. These pools are not separate. They are connected through funding markets, margin systems, and correlation structures that activate simultaneously under stress. The question is not whether Japan matters. The question is whether you understand what Japan just told us. The unwind has begun. That liquidity crisis will come. Strap in, my friends. XRP is about to take the spotlight. As Japan's economy cracks, XRP lays the rails for the rebuild. By end of year, 80% of Japan banks are expected to be using XRP, and BOJ collaborating with Ripple. The nation isn't just reacting, it's rebuilding its economic engine. XRP is turning remittances, exports, and tokenized assets into unstoppable liquidity flows. Faster payments means faster trade, real-time FX, and unlocked capital from trillions in illiquid assets. While trade wars shrink GDP, XRP expands access, speed, and global reach. Japan's edge won't be tariffs, it'll be tech. The future of economic strength won't be built with policy, it'll be built with rails. Are you seeing the shift?
Japan's economy shrank more than expected over the March quarter. GDP contracted by 0.7%. Or more than 3 times the drop analysts had forecast. The downturn was driven by stagnant private consumption and exports, and the numbers suggest the economy was losing steam even before Donald Trump's tariffs kicked in. The US president has imposed 10% duties on most countries, with Japan to face 24% levies from July unless it can strike a deal before then. Trump himself has suggested that could be possible.
From Japan, I'm getting along very well with Japan. We're very close to a deal.
But Trump has also put 25% tariffs on US car imports, a critical sector for Japan. And prospects for an agreement with Washington remain very uncertain. With exports and consumption weak, economists say it's not clear what can drive growth. That could put Tokyo under pressure to step in. Some lawmakers have already urged Prime Minister Shigeru Ishiba to cut taxes or provide more stimulus. However, the government says there are no such plans for now. The trade war also leaves the Bank of Japan with a difficult decision. It had been expected to do more interest rate increases, but that could change if a Trump-induced slowdown gathers momentum.
I'm sure that you all know now that we have reached an agreement with Japan and the U.S. for trade. Next up, Stellar XLM. Banks are entering blockchain, and Stellar Org is providing the infrastructure. Why the new U.S. Bank pilot is a much bigger signal than most people realize. U.S. Bank is testing custom stablecoin issuance, and they chose Stellar. Regulated institutions don't pick chains because of hype. They choose platforms where compliance is possible, control is possible, and reliability is guaranteed. And that's exactly why U.S. Bank is experimenting with Stellar. The key insight, why Stellar? For bank customers, we have to think about other protections around know your customer, the ability to unwind transactions, the ability to claw back transactions, and one of the great things about Stellar platform was learning that they have the ability at their base operating layer to freeze assets and unwind transactions. Mike Villiano, Senior Vice President, Head of Digital Assets Products, U.S. Bank. This isn't generic praise. This is a senior banking executive explaining why Stellar is bank-grade infrastructure. Stellar has been engineered for moving money since 2014. XLM was never a meme. Stellar has never been a casino chain. It's a global financial transport layer. 3 to 5 second settlement, near zero fees, global scalability, built-in compliance features, freeze and clawback at the protocol level. Very few networks can offer this combination and almost none do it natively. Mission-critical systems require reliability and Stellar delivers, straight from SDEF leadership. When you are doing mission-critical systems, moving customers' money, you need to make sure your blockchain is going to be there. We're honored to have the confidence of the U.S. Bank and PwC, Jose Fernandez de Ponte, President and Chief Growth Officer, SDF. This is how institutions think. Stability, compliance, and trust. And that's precisely Stellar's domain. Tokenized dollars are just the beginning. Once banks begin testing stablecoin issuance, the next wave follows. Tokenized deposits, automated treasury operations, on-chain payments, cross-border settlement, corporate stablecoins, real-world assets. The next generation financial stack is being built right now, and Stellar is one of the foundational layers. SDF's mission aligns directly with institutional adoption. Their stated purpose, helping to unlock equitable access to the global financial system by making the rails beneath everyday financial services more inclusive, interoperable, and efficient. This isn't crypto speculation anymore. This is financial infrastructure modernization. Bottom line, institutions have arrived, and they're choosing Stellar. This pilot isn't random, it's a signal. Banks need regulatory controls, banks need security and uptime, banks need predictable settlement. Banks need scalable infrastructure, and Stellar offers all of this natively and reliably. 2025 to 2030 will be the era of tokenized finance. Stellar is positioned to be one of the key blockchains powering it. U.S. Bank has chosen Stellar Org for its programmable money. Stablecoins, my friends.
And today we are talking about the tokenized future of banking. First off, from U.S. Bank, Mike Villano. He's Senior Vice President of Enterprise Innovation with U.S. Bank. Mike, why are we talking about stablecoin at all?
It's the exciting work we have when it comes to issuing stablecoins that we're partnered with PwC as an advisory company and consulting company to help us developing on the Stellar network and in partnership and collaboration with the Stellar Development Foundation. So we're very excited for that. But to your question around why stablecoins, it's another way to move money on a blockchain. And we look at blockchain as an alternative payment rail. And we're very interested to see what use cases are going to manifest from that and what customers are going to be most interested in. It's thinking about what compliance rules, what business rules you can build into this program, this new programmable money, and how we can potentially deliver that safely, securely, and reliable.
So we've been talking about blockchain for years, and we're at a point now where it's not about innovation anymore. It's about practical application in a rigorous, highly regulated environment where we're taking advantage of the tooling on chain, in this case on the Stellar network, to demonstrate that the promise of programmable money actually yields benefits for not only the institution, but the customers that they serve.
I only got one thing left to say before ending this video. The institutions are here, my friends. Well, that's what I have for you, folks. Until next time, stay stabby, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.